everybody. Welcome to State of the Market. We are going live with Mark in 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends across the pond. I am Mark Sebastian. I am your only option. Welcome to the State of the Market. In today's show, we're going to be talking about more issues around Iran, how the Strait of Hormuz closing is messing with supply chains. Then we're going to talk a little bit about private credit and what's going on there. And then we're going to talk about stocks being on sale. Where is their value in this market? Because, folks, let me tell you, there is value in this market. So as I'm opening the show, we came out the gate real hot in the S&P 500. Touched the 200-day moving average all the way up at 66.30. As it stands now, we're trading 65.93, up about 37 points. NASDAQ, the Q's up about call it 0.6%. Dow the same. IWM also looking strong, up 1%. Folks, what was my major lesson from yesterday's show? I gave you one big takeaway, and that big takeaway was that coming out of this, you're going to see IWM and the diamonds outperform the S&P. Today, we have IWM up 1.1%. The S&P is lagging behind both the Qs and the Dow. Not by a lot, but it is. And thus, kind of continuing to prove my point. And folks, if you believe that there is end in sight, then the opportunity to kind of take a stab at the Russell or the Dow does make some sense to me. Now, are we there yet? And the answer is no. What do we have on our hands from Iran? We have a 15-point plan from the United States. We have regime change from the United States. But who are they negotiating with? Right? We've got the Iranian Republic Guard on one, that's one voice. And then whoever the U.S. is talking to seems to be a secondary voice. So things are not clear. And while that's happening, the strait remains mostly closed. Now, allegedly, Iran was out saying, we're going to let certain ships through as long as they're not partners with, the United States and Israel. Well, who is that then? That's Iran. Maybe Lebanon. But it's not the Saudis. Oman, that'd be another one. Or Qatar, excuse me. Qatar. You've got Qatar and Iran. Those are in the Middle East and not enemies. Everyone else, UAE, Oman, Kuwait, Saudi Arabia, those are still on the enemies list. So for all intents and purposes, unless it's Iranian oil that the United States is going to let get out there, then there's still essentially not much going through that strait. And until that strait opens, none of this is solved. None of this is solved. Now, one thing being said is the Iranians are, call it, not quite trusting that the United States isn't pulling them into a trap. And if you do the math, it kind of makes sense, right? The United States already busted all their air defenses, everything like that. Now you give the United States a month of ceasefire and traffic running through. Next thing you know, we have enough assets to basically force that thing open, which we were probably going to do in about 2 weeks. But a month from now, we have the assets to open that thing up, whether the Iranians like it or not. I get why they wouldn't want to be at the negotiating table. which is why I think that Strait is going to remain a serious problem and why we're looking at supply chain disruptions. And folks, it's not just oil and nat gas, it's fertilizers. All right. It has a massive amount of fertilizers going through that strait. You know, we've all seen the chart of XLE and how it's taken off. Down 3 cents today, trading 60.80. XLE's had an incredible run. But take a look at under the radar, the fertilizer company. CF Industries. Look at the run that it's had since the end of February. It's up 27%. That's a pretty strong move in fertilizer, wouldn't you say? Mosaic. You could argue, what's going on with Mosaic? That CF looks strong and Mosaic isn't participating. Is that an opportunity or is that not an opportunity? So you see, within this broader discussion, right, the S&P 500, the quote-unquote market bloodbath, the bloodbath that is not, that has seen us drop, call it 5%. Within this 5%, there are some big winners and some big underperformers. Again, we're going to be getting to that in a minute. But you can see from names like CF, which is in the S&P 500, and names like Mosaic, there are different stories. In the last 3 months, Mosaic is up a whopping 60 cents. CF is up a whopping $50. Same exists in energy. We're going to be talking about this again. Same exists in energy. But the shutdown, until we see boats consistently go through there, that is going to remain a headline and going to remain a problem for markets. But there might be some hope here that, you know, the market may be signaling there's an inkling of hope here. One, oil is trading essentially at Monday's closing price. You know, we get a move toward that 21-day moving average. That's going to be positive. And two, TLT, which has been so bad, might be trying to break out. Emphasis on might be trying to break out. I need to see it trade above 87 before I'm a believer. But you do have some positive action out of these names. Same story with IEF. I need to see IEF get above 95.5 before I'm going to believe that markets are starting to calm down. Until then, everything we're looking at is noise. Now, when we come out of this, what are those two, guys? What are those two ETFs that are going to lead? I've said them yesterday. I said them today. What are the two ETFs that are going to lead? Right. IWM and diamonds. Remember that. Remember that. So, Iranian situation still in flux, but I'm going to say that we've got, we'll call it maybe green shoots here. I think that's fair. Now, the next piece that I want to hit on is private credit. I'm going to talk about it in a minute, for a couple of minutes here, and then I'm going to bring on our guest, and that is Andrew T. Giovinazzi. Private credit basically got its bacon saved by this war. If you look, prior to the firing off of missiles, these things were in a free fall. Here's Owl Capital. Since the war started, though, check it out. The shorts are gone. Why? They have bigger fish to fry, namely the rest of the market. Why am I not finding? There we go. I'm trying to find this. I'm sorry, folks. I should have had this pulled up. You know, there we go. I don't know why I couldn't remember this. I couldn't remember the stock symbol here for a second. Apollo Asset Management. This is another one that had seen some pretty nice selling. It's actually managed to get a bid, despite the fact that one of their credit funds is literally limiting redemptions. And then you've got KKR. Traders are trying to find a floor in this one. Part of the reason why they're willing to find a floor is that there is some real risk here. Private credit already has some problems on the software side. We've got consumer loads starting to be a problem. This industry, and we've talked about this. Yes, the move in bonds has been a problem. But it's really been a bigger problem for private credit, and they're not really showing it yet. And there's a possibility this selling is being covered up by, that lead of Iran is really cover for private credit. And let me explain you why I might think that. VIX futures term structure. Now, front end of the curve is in backwardation, right? We've got VIX trading above 25. We've got the April future trading above the May above the June. But then take a look in the back. From June to November, there's essentially no difference in these futures. None. For historical context, I'm going to take you back to 2025. And let's look at kind of what April looked like as this was happening. You had real curvature, and then it was kind of, flattened up at the back, but they were significantly lower last April. Front month to back month, second month to back month than we sit today. And why? When you see this formation, it's telling you what's in front of you, in this case, tariffs, is the market's problem. When we look at today and May and November are trading the same price, what that's telling me is that there may be other problems afoot. And we may have this private credit thing become kind of a weight around the market. This kind of reminds me what's developing of the mid-cap banking fiasco that we had back in 2023. Might have been actually 2022. I apologize. That's what I'm looking at here. We may have something else on the board. Speaking of on the board, let's bring in our guest. And he is my longtime partner, the head of education and director of option trading here at Option Pit. He is the one, the only Andrew T. Giovinazzi. Good morning, Andrew.
Good morning. T for too much fun.
Yes. So, Andrew.
Actually, you're supposed to say that. I'm not the one that's supposed to say that.
It's totally fine either way.
You're okay,
so,
with
Andrew.
it, though. All right.
You know, I kind of hinted at this already that we've got, within this 5% sell-off in the S&P, we've had energy really outperform really strong. There are sectors that are winning. And then within this sell-off, there are sectors that are really dragging it down. So, I mean, if you want to share this graphic, I want to show everybody the total return of the 11 sectors of the S&P 500 over the last 3 months. So going back to...
I'm assuming you have that graphic ready to go.
End of January. Amin has that graphic, believe it or not.
Okay.
So there are a few things I want you to see here. All right. Energy is the only reason that the S&P 500 isn't in a full-on free fall, right?
Yep.
Utilities look all right. Industrials have actually not done awful. Consumer staples and materials still doing okay. But then look at the bottom. Communication services down somewhere, around 7%. Information technology down 9%. Consumer discretionary, 10.3%. And financials look terrible at about 10.5%. Energy has had its day. If you go back to, if you want to go back to like looking at even the last 6 months, energy's up 30%. And going back a year, and here's where things get interesting. Energy is now over the last 12 months, the second leading sector in the S&P 500. Over the last 12 months.
Go energy.
Yes. Financials and healthcare are the worst. So Andrew,
that was a Frank theme in capital gains the 2 years. We just acquired energy stocks. It's been a good one because you can't do anything without energy.
Without energy, this has not been something we have ignored here at Option.
It doesn't work very well.
Yeah, this is not something we have ignored as a group, right? Think about the stocks that we've talked about with you guys over the last year, right? We've talked about oil and gas, Exxon, Chevron, as Venezuela was opening up. We've been talking about nuclear. Really, we've been all over this and have been proven to be right. Now, the Iran situation has made us more right than we were expecting. I don't think I had this on my bingo card at the beginning of the year. Maybe you did, Andrew.
No, I did not. I did not. I did not have the Iran thing on my bingo card at the beginning of the year.
Yes. Now, but looking at the last 3 months and those names that are looking awful, right? Consumer discretionary, information technology, communication services. Over the last 12 months, communication services was the leading sector. Information technology, third leading sector. Industrial, then you have consumer discretionary, actually kind of toward the bottom, 7th out of the 11 sectors. And then over the last, but these are names people want to own, right? People love. I mean, 2025, if I had to hear the stock symbol NVIDIA one more time, right?
I believe you called it the vampire.
Yes.
In 2024, the vampire is sucking up all the dollars.
Yes, but then you also have, Mag 7. You have your AMDs. You've got Micron. Apple. These are all the widely held names that, on a 12-month look okay, but over the last 3 months, they're all approaching down over 10%. Now, and approaching 52-week lows. Now, Andrew, this leads us to kind of discussion I want to have with you. When you see sectors and stocks down 10%, maybe even starting to approach 52-week lows, that starts to get your ears perking up, doesn't it? Especially on widely held names.
I believe it does. Because you're what you're looking for is, first off, 52-week lows. Those are in and of themselves, those are good. Because it's an opportunity, right? Stocks that are at 52-week lows a year ago were not at 52-week lows. They were at higher prices. So you want to see when the market is bailing on something, because that gives you an opportunity to look for a reversal. So there are 3 sectors right now I am looking at currently. Mark was quite correct. Financials are definitely, if I'm using Sybil and checking it out, real estate is definitely on balance. And real estate and financials are the ugliest stocks. The most stocks in my sector that have hit that number. So
yeah, I mean, again, the only thing saving financials from sitting at a 52-week low was we're still including last year, April of last year, as a part of the data set year over year. And those are about 3 weeks away from being completely off this data set.
Yep.
Now, you mentioned the word Sybil. You mentioned the word Sybil. Why don't you talk to us about, Sybil is the new AI engine that you built.
Yep.
And it's got kind of 5 steps to it. FP1.
That is true.
FP0, 1, 2, 3, and 4. FP0 is stocks approaching 52-week lows. And you got
those are the short where the short candidates come from.
All right. You have
there's a lot.
Right. And you have stocks making a 52-week low, and now you're looking for them to rebound 10%
Correct.
off the low.
Yep.
And what I notice is you've got technology, consumer cyclicals, consumer discretionary, another word for that, and technology.
Also, unclick that little purple button up there, Mark, to the right, the 5,000 little 5,000 OI minimum thingy.
Yeah. Oh wow! Look at all that.
Yeah. So there's
healthcare, consumer cyclicals, and real estate and technology are all over this thing.
Yeah, the financials are again looking at this as an opportunity, or one might call it a special situation, right? Because the market is, when the market decides to hate something, they hate it in a big way.
They do.
Yep. So this is a this is where opportunities come from. Opportunities come from when the market decides to get out of everything in mass because there's a panic. They want to move into energy. Like right now, if you're not selling some energy stocks here, yeah, I don't know what to tell you, right? So I've been kind of piecing out of my energy stocks, and I'll get them back down to probably a 10% allocation. Right now, because of the price of them, they jumped to 25% of the portfolio, 30% of the portfolio, which is probably too much, because generally the energy stocks don't really provide growth, they provide income, right? So when you have the stocks doubling or going up, 70, 80% in 3 or 4 months, you're like, or 100% over the year, you want to start getting rid of some of those and get ready and prepare for the stocks that are on the bottom of the cycle, that are still companies that still function. So this is the time you got to do it. When things move, you got to act. So
and I want to kind
Sybil is providing me now with a list of stocks that I want to start looking to buy again.
Yeah, and I want to kind of show you an example of how this Sybil system, the Sybil, the AI engine works. And I'm going to take us back to June of 2025. I'm going to need a 2-year chart here of Cisco systems. So Cisco hits a 52-week low in April. It makes its new 10% back, and you put everybody into calls on June 13th. Cisco was $64. By the 26th, you've already made 66% on that initial call purchase, and you sell them, but you don't stop there. You go and buy another call, and then you wear this call all the way up until we kind of max out at near $80.
Yeah, it was around $80.
Yeah. So you see how this isn't trying to find the bottom. It's trying to find when we're safely off the bottom and starting to rally, and then putting you into a trade that will make you money based on, a full set of criteria that I don't have time to go over today. But there is going to be time to go over this today, like at a later hour.
Correct.
Yes. Andrew and Hannah are going to be walking you through, and you're doing a trade, correct, Andrew? Or showing a live trade that you already have on that people can get into.
It's a delayed trade that
today,
we have on. We're up a little money in it, so I don't mind telling people about it now. But all my subscribers are already in, so
they're already in, and they're already up a little bit of money. But you're not selling yet, right?
Nope,
folks. If I'm up money on a call or a put, and I haven't sold yet, that is me as a trader telling you I still like owning it.
This is true.
So these options typically they have a lifespan of 3 to 6 months. So it's been on for 2 or 3 days. So if you'd like a look at that stock, why they're trading it, why they're in it, what their targets are, the entirety of how a trade in the Series Club works, then you're going to want to join Andrew and Hannah at 1:15. I'll be live from 1 to 1:15 to kind of chat up the room and talk to you guys about what we're seeing on the day and why this is such a powerful tool. But the trading will start at 1:15. You can join Andrew and I today, and Hannah, and we're going to be looking forward to seeing you there. Andrew, we're running up against it. It is already 10:30, but I just wanted your real brief thoughts on private credit and what you're seeing there. Have any of these names, right, because they're all sitting at 52-week lows, are any of them even approaching being interesting from a long perspective on your radar?
Yeah, there's a bunch. There's like 7 or 8 larger names.
that are starting to approach.
Yep.
Now, they're still right at that 52-week low, like a KKR, starting to get a little bit of a rally, but certainly not there yet. But these have started to kind of hit your radar as names that when the time comes, you're going to be able to be involved. Because look at a name like KKR, folks. And this is the opportunity I'm talking about. This is the opportunity I'm talking about.
You just want to see. You want to see those. You want to see those big dollar people start to pile in to KKR, right?
You do.
Because you would think that would be something that institutions want to jump into with relative to where the stock price is right now. So that's the next thing we're looking for.
Yeah, and Andrew, what I love about what the Series Club does, right? I get people asking me all the time on a name like KKR. Hey, Mark, when is it time to buy this? Right? Does that sound familiar? You guys have watched a stock that you like fall 50% or 40% like KKR has. And you're asking yourself, when do I go long? And you ask yourself over and over and over again. And by the time you say, hey, it's time to go long, the stock, or time to buy that stock, the stock is already up 25% because you weren't ready to jump in. What I love about what Sybil does is that it kind of answers that question. When do I get in? It answers that. All right. Once again, I would invite you to join Andrew, Hannah, and to a lesser extent myself today at 1:15 as they go through their newest trade produced in Series Club by Sybil and answer all of your questions. All right, everybody. Like I said, we are up against it. We're 3 minutes over. Andrew, thank you so much for hopping on board and sharing your wealth of information.
You're quite welcome. My pleasure.
So for Andrew T. Giovinazzi, for Too Much Fun, I am Mark Sebastian. I am your only option. And I will see you tomorrow at 10 a.m. And you want to be there at the top of the show because we jump right in. All right, everybody. I hope you have a great trading day, and I will see all of you at 1:15 p.m. Eastern Time. Have a good one, and thank you, Amin.